Now, officially, welcome out to the Market Watch Group midweek check-in. Uh, did I get an email yesterday? I believe I did, Stephen. I believe I did, yes. Good morning, everybody. I'm Scott. For those who are new, I hope that you are feeling comfortable to interact, to make sure everybody knows your name. So good morning, Lee, Graylin, John. We got some new folks that are starting to be in attendance, and we're very happy to have you, and hope that you feel comfortable asking questions, lending your voice. We definitely want this to have a collaborative feel. So it's interesting. Let's get into it, though. Quick check-in with disclaimers. Remember, we're not brokers, we're not advisors. We don't give advice or recommendations. First and foremost, if you're in the two calendars, unless the market gives back the early gains, that is going to be stretched, and it's probably time to take that, and it's going to be a loss. Nothing we can do. We've actually done, I think, 4 calendars, and that's our first loss. The other one's fine. So if the market, well, let's just get into it. We're going to get into today's market. We're going to look at our posture to see if we're on point. And the answer is yes. I mean, it seems like we may, depending on how we come out of this, maybe we avoid the correction. I don't know. I mean, I don't see how we're going to escape sideways market, knowing that even with this, we're unlikely to get a Fed move until September. Even still, September. I would imagine we're going to see it here in a second. Mindset for open trades, because that's a long time. 3 months, 4 months. It's going to be hard to just go up trending for 4 months as we sit and wait for when the Fed's going to eventually cut the rate a quarter of a point. Okay. Explore setups, trading plan progress. Let's get into it. Okay, let me get a chart. Let me get our posture. And we improved. We said the market might. I mean, look, we are bullish still, slightly bullish, but bullish. It improved. I think, yes, it improved. The market looks. That's the futures right there. So you can kind of see now, even on the futures, we're off the high, and we didn't get to this high. And remember that for me, that high's got some importance right there. That's where if we can't get through that or even to that, it represents a distinct inability for buyers to regain that ground. Now, it's still from here, if you look at your stochastics, down here, we're in this overbought, and it's just sort of sliding along at this overbought. Remember that when momentum hits, that's not going to be as helpful. The question is, are we going to get to this point, or are we going to retreat from it? Are we going to pull back? And here's the thing, until we break this high, that's kind of the analytical narrative that I'm looking at now is in place and intact until it breaks this high. The reason I say that, because if we go back, remember, we're correlating this first heavy drop followed by the recovery to this first heavy drop. I believe this one was, they were about a less than 1% in the difference of the drop. And we got up almost to the high. And we're up almost to the high. And you can see it pulled back to the 50, and then it started to bounce off the 50. So we might see this thing pull back to the 50 and start to bounce. But you'll notice that even on this bounce, it never got where? Back to this high. With the lower than expected CPI data. Well, we're bullish on the open, press, right? In 2 minutes. That's what this is telling us. Remember, this is the futures. This is actually today's candle already moving. So when we look at the SPY, just imagine the SPY at the top of this candle. It's not going to have the whole candle. It's just going to gap up a little bit. That's what we're expecting today. Right? We're expecting a gap up. 0.46 on the S&P, 0.33 on the Dow, 0.47 on the NASDAQ, 1% on the Russell. Oil's down 1%. Gold's up a little bit. Softer inflation print. So did it put it in? Let's see if it actually put the data in for us. Expect to see some volume today, Steven says. Okay, maybe. Maybe. So there's the SP, there's the ES. It was up 0.46, and we can just sort of watch that a little bit and then transition over to the SPY as the SPY starts to settle in. Right, so we're up just a hair under 0.5%. The question is, have we been pricing in this hope and now we've got it, and the market doesn't move beyond where it is? Or are we going to rally and break highs? That's the question. That is what we're all here to see, to understand. And let's switch over to the SPY. I'm not convinced. even though we got the news, we're gonna go back. I want to see exactly what it is. Okay, so on the SPY, we actually did break highs. So that's where it's interesting. Is on the futures we didn't, and that but here we have tested into new territory. But the question is, does it hold? Right? It's a long day. Does it hold above that, or do we retreat back below these lows? Let me zoom back in. That's the area there at about 524 and change. Yeah. Okay. It'll be interesting to see. Do we get follow through, or do we and do we hold on to it or not? All right. What else is in the news? What else do we need to discuss? Let's get back over. Inflation rose in April, but showing signs of cooling. Retail sales fall flat in April as consumers show signs of weakness. We want flat. We can live with flat. That's about it. That's an interesting one. Charles Schwab website is a mess. Hundreds of. I wouldn't know, quite honestly. I don't know. I don't know that I've actually logged into their real website, other than to download the Thinkorswim platform. So, anyone had to go in their site or talk to them yet? I'm curious now. I find that I'm loyal to the platform above all. Had issues. Michael did. Okay. All right. I want to see what the numbers were real quickly. We'll let the market percolate for a second here. CPI rose 0.3 and 3.4. CPI, okay, 0.3. So, and 3.4. So that came in as expected, a little better and as expected. And then core was supposed to be 0.3 and 3.6. On a core basis, it came in at 0.3 and 3.6. So we basically came in as expected. Bob was moved this last Monday, no problems yet. All right. April CPI may not be enough to excite the Fed. Right? Okay. All right. Well, there it is. So we got what was expected. I mean, one piece was like one tick better. Remember the rest of this week, what do we have? We have jobless claims, a little bit of production and utilization. Nothing really on Friday. Next week, pretty minimal, pretty light next week. So if this isn't enough to excite, the question becomes then what is? So if this doesn't hold, if it doesn't hold, if it gives it back, if it doesn't have the volume, if there's anything about the market's reaction that is like, oh, wait a second, I may not be as inclined. Well, I guess we'll hold off and see. I'm going to hold off and see because I want to see, does it hold on to this throughout the day? Because if not, we don't have much coming. Jobless claims won't do it. Production capacity utilization, there's nothing there. Nothing Friday. Nothing Monday. Tuesday we have a panel. The panel doesn't include Austin Goolsbee, and so like we said, is it a panel? Wednesday, minutes, FOMC. See, I just don't see anything. If this doesn't hold, then we'll see. A little bit of follow through so far, right? We opened and it pushed, and then a little bit of a push. We'll see. We'll see how much momentum this has. One question's going to be now, if it closes this gap today, meaning in the afternoon we give this back, this 0.5% that we have right now, a little bit more than 0.5%, then I think we're right back where we were, right? We got news we were hoping for. It sort of has to hold today for this to be believable. It has to hold up here And yesterday, you can see we got average volume, a little under. A little under. Steven is expecting big volume today. We'll see. We'll see. Does that happen, right? And you can see already, look, it's the opening range. That's why we wait for 20 minutes before making any conclusions, because it's not like, oh, it's going to the moon. You're like, oh, wait, nope. Next candle was red. Hold on. Let's just be patient. Let's let it establish itself, and then let's see which way does it break out. Because if after 20 minutes it has this range through here, and then later in the day it breaks the bottom of this range, then I think we are going to end up back at this level. And then it's just like, back to the drawing board. So, all right. Prediction on Monday evening has held so far. Remind me what it was. You said if it was that it would gap up. Yeah, I agree. Definitely, and it had an initial response. Although, for me, it's like, was that initial response, we're so excited that this is the news we got, or we're so excited that we didn't get worse news than that? I don't know. We'll see. You guys know I'm a skeptic. All right. Let's roll back out. And as far as our posture goes, I don't think there's anything that we missed. We even said we could have raised this last time. If this higher high holds, I think we will raise this back to 1.5. Volume, maybe it gets back to neutral. Major market, we've already seen the Russell. Like the Russell was the strongest at the 66 day. We've already scored that, right? This would have to see a resurgence of the NASDAQ as well. Sectors, and then the VIX. I don't know. Yeah, this is a tough one. I think we'd probably, as of right now, I think we're exactly on point. The question is, do we get another quarter point or so? That would be 3 weeks in a row of increase, right? Back here, we had 1-2 weeks of increase and then one sideways. This is what was going on back in that August-September period. So we didn't have 3 in a row go up. We had 2 up and then we had a sideways. But it was at 4.25. And right now, we're looking at the possibility of another 0.5 point, moving back to that 4.25. So to me, I think it's still just tenuous. That's my thought. Now, some of you might be like, Scott, I'm more bullish than you right now. Awesome. If that's what you see, what does that mean? It means you'll probably take a little bit more risk than me. That's all it means. You'll take a little more. I mean, these aren't like earth-shattering differences that mean we trade fundamentally. It means that you'll take a little more risk. You'll push a little harder. You think there's a little more there? Great. For me, I'm going to still be a little more cautious with anything new bullish. I still have an open door to speculate bearishly, not just hedge. And I'm still primarily going to be looking at calendars and butterflies, even though one set of those is, if this thing holds, is going to have to be shut down for a loss today. Okay, there it is. Let's go look at our watch list. Any questions? You guys feeling it? Do you agree? Do you disagree? Do you think I'm missing anything? At the end of the day, for us, we always want to make sure that whatever posture we have or whatever we see, we're able to answer that all important question. Well, now what? Now what? Even if this holds in this like upper space, I'm not prone to breakouts where I'm like, breakout, let's trade. It would have to, I mean, it's, if there's anything bullish left, you have a little bit more follow through. Remember, we are 13 days, 13, not days. Remember, we are 13 minutes into this 6.5 hour market of ours. It's a long day. It's a lot of work. Buyers have a lot of work ahead of them to hold on to this. Yeah, that's all. Let's get to the watch list. Apple. So Apple, you can see, has actually gotten to a new high. This is actually great. I'm bullish on Apple. If Apple pulls back, and it doesn't even have to hold this low, but wherever this line moves up to, I would say it's going to be probably pretty close to this 180. I mean, as I look at, by the time this pulls back, yeah, I would say 180. If it pulls back and holds 180, I'm going to look at that as a viable opportunity. I love trading Apple. ACB. So the pot stocks gave a signal back in here, right? You can see the stochastics turned, green candle. I don't know. Anyone take it? It's really would have been more of a stock trade probably because it's a $7 stock, but I didn't end up doing it. I thought about it, and then I was just like, I really only started watching pot again. Someone's like, oh, have you seen pot stocks? I'm like, no. Oh, look at that. You can see why, right? If you watched it, it would just be like meandering down, down. Oh, is it ever going to do anything? And then, boom, it broke out. So I'd say for me, the first trade that would have existed is here. And this would be the second. Why this first trade? Because remember, I'm waiting for a break of the consolidation. Got it. Right here. I guess maybe you could have seen this as a pullback and then a trade. So I guess there's one there and then one there. That's really hard to try to say that's a trade. Anyway, getting reacclimated. AIG, I think, is setting up. Do you agree? It got to this high. It's pulling back. You can see your stochastics is setting up, but it's really not giving back much ground. This old high back here, this old resistance is definitely coming in as like a new support. I love AIG. I think AIG looks great, and I think financials look great. It's very close, and I would say there's a good chance we see a trade alert coming that way. AXP. AXP, I had already traded and I had closed and I shut the rest down, and now I'm waiting for the next signal. I still think it's at the same resistance, so I'm going to be patient on that one. Boeing, nothing there. Oh, look at Bank of America. Anybody in that? That's on our list all the time. New high. I like it, but now I got to wait for the pullback. Citigroup, I like it, but I got to wait for the pullback. So there's a lot of things actually that I like. And so it's going to be tough because when we get a pullback, there will be a heavy temptation to put. I mean, look what we have so far. We're at the C's, and I like Apple, AIG, BAC, and Caterpillar. So I've got a couple of financials, a technology, and an industrials. And we're 10 stocks in. So yeah, there's enough signs of bullishness here that to have a half full cup. Chipotle still looks bullish. The split's coming up soon. CNM, financials, Capital One. I don't know. Does it feel like it's just sort of shriveling and dying and like not not doing anything, I'm a little concerned. Capital One may need an intervention. COP, love to see oil retreating additional, giving up additional ground. Costco's on my list. Costco pulls back, boom, I'm bullish on it. It's in the process right now. So there's another one, and that's consumer staples. So we've got stocks across 4 groups so far. CRBG, I still think is in the process of its consolidation, but that's a mover. It can move around. Delta. Overbought for me. Let me know your thoughts. Hold on, I need to check comments. Pot stock too choppy. Yeah, I agree. Sorry, I'm just getting caught up on some comments. They say financials and defense will be strong toward the end of this year. I mean, the financials are strong now, that's for sure. When you say defense, do you mean defensive stocks like staples and utilities, or do you mean like defense stocks, which is a subset of industrials, RTX and Raytheon and Northrop Grumman? People sometimes use defense kind of loosely, and they don't bring military. So you're saying defense. So you're saying Raytheon, Northrop Grumman, etc. Okay. Okay, we'll see about that. That sounds nice. Sorry, let me go back to my watch list. The Dow at old highs. Does it test? Does it break? Bitcoin's kind of flirting around. GE. Oh, look at GE, you guys. GE Aerospace. Beautiful trend. Nice pullback. Stochastics oversold, starting to pinch. That thing's ready to go. So, yeah. I'm watching for it. I'll put bullish alerts out. If these things go, I'm going to put it into an alert because there's really not much on right now. And if this market breaks out, we've got to get some stuff in place. Gold, up but iffy. Google. I'm still bullish on Google, but I'd be looking for a pullback. IWM, so you can kind of see what's happened. The small caps gapped up, ran up here, pulled back, and then sell. Haven't closed the gap yet, but is it getting iffy as to whether or not it holds? So, what else? Meta gapped up, pulling back. So we kind of have that happening here, right? But I like Meta. And I would be willing to let Meta pull back. Microsoft overbought. Micron. So I am still bullish, and I actually have quite a few things that I look at and I think I like that. It's a weird place right now, this market. Nvidia holding on to that secondary channel that it seems to have slipped into, but still there. Bakar, nothing. QQQ. Testing new highs, not quite, but it's right there. RTX, here's one of them. Steven, RTX. I think it looks quite bullish, and you can see it's setting up in a flag right now. So It's an industrial. It's a defensive. It's very strong looking stock. Yeah, it's worth consideration, right? SPY. Okay. How's that opening range looking? And so you can kind of see now that we're 23 minutes in, it's not like, oh, this looks great. It's like, oh, are we going to hold on? They've got a lot of work to do to hold on. So let's buckle up and settle in for this long day and get a sense of where it ends up. There's that VIX making a lower high, which is bullish. But does it hold on, or by the end of the day, does it still put itself into, we're still establishing a new high? That's only a lower high if we keep this engulfing pattern. If this candle goes back up and gets above yesterday's close, then we're still on our way up. It's still an upward trajectory, and we don't know yet. That's the problem. And that's where I think we are. We don't know yet. VRTV looks like it's trying to turn and like give a signal, but I was looking for a pullback towards the 50, to be fair. Wells Fargo, a little overextended. I like financials. I just need a pullback. Waste Management, sideways. There's better. Walmart, sideways. I like Costco better, and I like Caterpillar better. So I'll watch these because they're big, and I want to keep an eye on them, but nothing there now. Basic Materials. It looks like it's at resistance. You can see it started up here, and it's all the way back now, back in line with these guys. That was a quick retreat from this space up here. It's not ready for it. It's not ready for the big time. Communication services. I mean, everything's giving it back. So it's like, was the news good enough, or was it like, no, we're still probably going to have to grind it out sideways for a couple of months? Energies, we'd really love to see energy keep dropping because that'll be helpful. Financials, yes, they look great. This is why we've loved them. We continue to love them. They're our favorite right now. I say I'm speaking for all of us. You might think, Scott, that's not my favorite. Yes, it is. It's all of our favorites. We share in that together. Industrials, also strong. Technology, it's trying its damnedest to get back into position here. Staples, though, look how bullish that looks. Remember when we said back here when we're like, okay, I need drawing tools. If you remember, back, come on, there we go. Let's get this pen going. Back here, we're like, this is just steady. That's not really defensive. And then all of a sudden, this thing's, that looks and feels different. And it does have more of a defensive appearance. So I am concerned about that. That's why I'm saying, like, we don't look at this one even more so. All of a sudden, we've got this push. Healthcare and consumer discretionary, kind of iffy. Yeah, mixed bag, right? We've got ourselves a mixed bag. It should be our favorite. Trading plan. Trading plan this week. Remember, we are working on section 4. Risk management. There's videos. So every time I send you an email, if you scroll through the daily email, what I do is I put a quick little recap of like the market. I put the link for the video. So if you missed that day, it's a quick, easy way for you to find it. You can find it on our YouTube channel. You can grab it from the email. So in the email, there is a watch today's video, and that'll take you into the link. If you ever can't find it, or if it's wrong for some reason, you can go into the Market Watch chat and just put a post that says, hey, I can't find that video. And I can just post the link and say, here you go. It's no problem. Doesn't take long. Additionally, if you scroll down the email, you'll see it'll talk about what trading plan section we are working on this week, every week, every single week. Does that mean everybody works on their trading plan every single week? Of course not. None of us do. We try our best to. Some weeks we do better than others. But it's there for you that if you're right now focused on your trading plan, you know right now we're working on risk management. And there's a couple of videos that are specifically about the risk management trading plan section. So you can watch those videos. Work on that. An hour a week is what I ask for trading plans. That's it. 1 hour a week. If you watch videos, it doesn't count. An hour of actual work. The videos, it's usually 1 15-minute and 1 45. So you got about an hour worth of videos. So if you're going to watch the videos, 2 hours a week. 1 hour of work, 1 hour of the videos, and you will make absolutely phenomenal trading plan progress. Because you'll be like, I'm not sure what to do with this. And then you'll be like, oh, here he's talking about it on the video. Here's showing me. And then you'll also have the trading plan sample where you can see, oh, this is what a fully developed trading plan looks like. And it might give you some ideas and some starting points. Whew. But we're working on section 4. That means that on Sunday, we'll switch and we'll go to section 5. And then boom, 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 boom. And when we hit section 8, we start over for another 2-month cycle. Every 2 months, you get a newer, better version of your trading plan. Every 2 months. It's great. All right. Well, it's great to see everybody. Let's see how this market does. Let's take one last peek. We've now got 30 minutes. And we'll see if we think SPY. Why am I not typing here? What is happening? SPY. Go. And now you can see it's a doji. So we'll see. So far, so good. Okay. I don't know. I'm feeling like it kind of limped in and had no follow through. It wasn't a look, we got exactly what we wanted. It was a look, it wasn't bad. I still think we're kind of in the same place we were. And that's hoping we get at least one by September. Oh, you know what? Real quickly, if you have 1 minute. If you have 1 minute, let's go take a quick peek now at this update. So obviously there's no expectations in June. And we're already 4 weeks out. Same here. The expectation is this 70 is just going to creep on up to 90 because nobody thinks it's going to all of a sudden drop. This is what we're looking for here. The September meeting. And you can see, if you look down here, this is the highest percentage we've seen yet, but it's still barely better than 1.5 to 1, right, for September rate cut. So I don't think anything has changed. I think that's a long time, September 18th, right? That's four full months from now. I guess we'll see. All right, what's the rest of the day the rest of the week look like? As always, there is an event scheduled, trying to create a opening presence and a closing presence on every day. but it's members only. I'll start it. You guys can pop in and see if anyone's there. And soon we'll have Glenn that will schedule to participate in those, just to kind of hang out and get more participation. So keep an eye out for that. Oh, Glenn, Monday. Monday is not just a cocktail hour. It is a meet and greet. So I'll be there, and our new coach, Glenn, who's going to start to be, he'll start doing some Tuesday, Thursdays, and then he'll start picking up days here and there and joining the group. Monday evening for cocktail hour. Monday evening. So Monday at 8:30 p.m. we have our cocktail hour. Let me pull this over just in case for those of you who are new. Let me pull this over here. So here I am in my Discord, and over on the left is where you can see all of the text channels, and you can see, and there's going to be a tour. I'm going to film a tour soon that we're going to post up that you'll have. But if you look up here at 11 events, if you click on that, it pulls up this nice little calendar. So you're like, oh, I have a Wednesday closing watch. That's just for members only. And that's at the Market Watch meetups. You can go hang out. But if you look, next Monday, Monday the 20th, 6:30 p.m. for me, 8:30 p.m. Eastern time, we have cocktail hour. It's a lot of fun. Everyone who comes loves it. That's also at the Market Watch Meetups channel, and that's a voice room and a video, so you can turn your video on, get to know other members. But Glenn will be here because Glenn is, so you'll get to know Glenn. You can ask him about himself. You can ask him how he got into trading and what style he likes to trade, and get to know him personally, so that as he starts to become more of a presence as an instructor and a coach, you'll feel more comfortable with him. So put it on your calendar. Let's get our biggest cocktail hour yet. And because it's a big deal, I'm bringing an actual cocktail. I got a little complacent. I'm going to mix a cocktail for that one. So I hope you guys can come. Otherwise, we've got tomorrow night, we have a foundations, workshop. It's going to be a fun one. We're going to do a psychology. Tomorrow night at 8:30 p.m., we're going to do a trading psychology workshop, a mindset workshop. So if you're interested, join us. That'll be an awesome one. Other than that, I got to run. It's good to see everybody. Have a great rest of your day. And as always, happy trading.